there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka Pal along with me, Sneha. We ended on a flat note, but overall it was a 1% gain on Nifty for this whole week. In fact, more of a recovery trade the way we saw on the global markets also. Nifty also reversed all the losses which they incurred in the last weeks on the fears of US economy slowing and yen carry trade. But then Nifty in specific gained 1%. Main action was in the broader market. Small cap gained nearly 3.5% for this whole week. Mid cap was up nearly 2% this week. This whole week, the top sectoral moves, the highest sectoral moves we saw was in metal index. That secures a top spot because the dollar index continues to be under pressure. It's still trading below 102, nearly 101.26. That's what the level is, and that's how we saw that the entire metal pack was shining bright this whole week. And the top gainers from both the small cap and the mid cap space comes from, and even the large cap space comes from metal space only. PSU banks, they made a comeback, and that was a second highest gainer also sectorally, 2.5% up the PSU banks, what we saw on the index level. And defensive names like FMCG, Pharma, they were also back in action this whole week. In fact, many counters from this space were also dragging down, but more on the gaining sides were there. Hindalco, BPCL, SBI Life, stocks from broader market like IFL Finance, Angel One, Nika, a lot of new age stocks were in action this whole week. In fact, many of the stocks have already doubled from their 2024 lower levels, nearly 100%, nearly 90%, many of the stocks. Stocks like Mazagon Dock, Lodha, Prestige, Tata Motors, ONGC, M&M, they were on the dragging side, losing side. But then the spotlight also stops at IT sector, which happens to hit the record high this week, and majorly led by stocks like L&T and Infosys. Of course, clearly the value is getting retested the way we saw the shipping, defense and railway stocks. They were dragging. Looks like the sectoral churn is happening. Investors are booking profits in these spaces. A couple of reasons there. And that's how, and maybe the money is moving into the newer themes like new age stocks like Nika, car trade, block trade today happened in Nika again. Nika, car trade, Paytm, PB Fintech, they were the stocks which were clearly in flavor this whole week. But then a couple of upgrades which actually got many stocks higher were from cable and wire space also. So a lot of action, Snehi, what we saw this week. But then main action also lies for what comments we will hear from Jackson Hole. That's what the globe is eyeing.
Well, the focus is going to be on global commentary as well, but yet some other stocks that were buzzing over the course of the week was Zomato and Paytm on the big transfer of the ticketing business that took place. Zomato has purchased that business from Paytm for north of 2,000 crore rupees. So that was a constructive deal coming in. You had Paytm that surged during the day in the first half, but then sentiment started to turn a little negative. Paytm ended the day lower as well as Zomato on the day that this transfer happened. Other than that, also lots of areas to watch out for, lots of exclusive stories that we brought to you on ET Now over the course of the week. You had railways tenders worth 30 to 35,000 crores are in the offing. This is something that exclusive sources have told us. Lots more action coming in on that front as well. And July economic survey also indicated that economic momentum for now is looking intact. So that was another key positive coming in. Exchanges wrote to SEBI and they wrote in favor of the support of the F&O norm proposals. The 7 proposals that SEBI had put forth, the street has accepted them, and that was another key positive for the sector as well. Very quickly, let's take a look at some of the top gainers when it comes to this week, and it is surprising how many stocks have surged in double digits, because PCBL, these are some silent gainers, 24% higher just in the week. Minda Corp is also 22% higher. Godfrey Phillips, Angel One, All Cargo Logistics, all of these stocks higher anywhere between 18 and 23%. But on the flip side, like Priyanka mentioned, Mazagon Dock was lower 11%, Macrotech, Garden Reach, Triveni Turbine, Prestige, SJVN, Sun TV, Cochin Shipyards. A couple of defensive names also, and rather defense names are coming in on this list. But let's make sense of the week that we have seen go by and what to expect heading into next week. And to do that, we have been joined by Rajesh Palvia, Head Technical and Derivative Research at Axis Securities. along with Mayuresh Joshi, Head Equity at Markets Smith India. So, gentlemen, thank you so much for joining us. And Rajesh, first of all, I'm going to come to you. Take us through the levels that you are spotting going into trade next week, because you've seen our performance coming in from the broader markets. But what do you think the benchmarks are poised to do over the course of next week? And give us some key levels you're spotting.
So, Sneha, if you look at the overall structure, still we are in the bullish trajectory for both the indices. But still, Nifty is struggling to cross 24,900, 25,000. That's the level is, catching up more call writing activity. So 25,000 is a steep resistance at this juncture for the Nifty, and we may see short covering action if we are able to take out about 25,000 level. Looking at the data setup, the major put-based concentration is placed at around 24,700, 24,600 strikes. So any minor decline towards 24,700, 750 zone is a buying opportunity in the market. And one should keep their stop loss around 24,600 to hold a long position for Nifty also. And we believe that, maybe possibly in the next week, we may see a attempt of crossing 25,000 level on the Nifty as a broader market is showing good traction in terms of buying. That clearly shows that confidence is there on the street even at a higher level. Bank Nifty is still struggling to cross 51,000 mark. That's the challenging level at this juncture for Bank Nifty. But the way most of the PSU bank as well as the some of the private banks or large cap banks have recovered from their recent swing low, that clearly giving us a sign that maybe Bank Nifty may also attempt to cross 51,000 level in the coming week, and if that happens, then this rally can extend to 51,500 zone also, because major call writer needs to cover their position if he crosses above 51,000. So that's the level to watch on the high side. But on the downside, 50,000, 50,600 is the immediate stop loss where one can keep at the current level and hold their long position for Bank Nifty also. But we believe that the sector like automobile, pharma, fertilizer, these all sectors can be looked at for coming week where we can see good traction.
Okay, that's the initial view coming in from the Rajesh. Rajesh will get you his recommendation also in a bit, but then Mayuresh Joshi also joins in for his view on the markets right now. Mayuresh, welcome. Tell us the kind of move that we saw this week on the PSU bank space, especially. Earlier, we saw that the private banks were leading from the front in the banking space, and of course, there were a couple of reasons because the kind of banking sector saw, they were witnessing uptick in credit costs. Their 1-year average levels were returning. The valuation was returning to 1-year average. But then now the kind of PSU banks have taken a step ahead. They are leading from the front. What is the view that you right now, developing on private versus PSU banks?
Afternoon, Priyanka. No, I think two aspects here. One, in terms of the entire sector, and deposit mobilization seems to be the sore point for stocks within the private space or the public space in general. And therefore, how deposit growth will shape up is something that the banking industry will look forward for. Do they look for alternate sources of funding, commercial paper, certificates of deposits? Do they increase their lending rates? Do they increase their deposit rates, which might take a little bit of a hit on their NIMs and spreads? All these aspects are something to be looked for the sector as a whole. Having said that, and with the expectations laid out, the earnings expectations for most banks within BFSI probably still look very, very strong. Asset quality pressures are significantly off. You're probably seeing capital adequacy remaining extremely strong, specifically tier 1 capital. And the provisioning that most banks have, whether private or public, on their balance sheets will cover in terms of expected losses over the next few quarters as well. The expectation in terms of how this entire scenario plays out will only be known in the next 2 quarters. But looking at what you asked me, Priyanka, in terms of the argument for private versus public, I think both spaces and its selective stocks within these spaces still seemingly look attractive. We look at the EPS rating, RS rating, institutional holding, and a lot of canceling parameters on that. I think ICICI Bank, private names, the public sector banks, Bank and probably.
Okay, thanks for that view coming in, Mayuresh. But I want to come back to you for a quick check on the entire FMCG space, right? Because the third top sectoral gainer over the course of the week, Nifty FMCG has also done pretty well for itself. Now, over the course of the week, we have interacted with various stakeholders from this space, and we are hearing some commentary about rural recovery. Do you think this upswing, that if we could call it rather, that on the FMCG front, do you think it is here to stay now that monsoons have been rather good? You have the festive season, wedding season coming ahead. Do you think now is a good time for someone to foray into the FMCG space?
So for the space as a whole, our take is that with expectations of inflation cooling off and the expectations of the rate cut cycle also expected to initiate in India, following the large expectation, we'll come to know that today, of the Fed cut starting in September. The rural consumption should start taking a big boost. And therefore, I think most management commentaries from within this space are indicating to significant amount of rural discretionary spending coming back in the second half with better crop produce, with better crop realization, so on and so forth. Now, as that translates into better volumes and better price realizations as well, both volume and price-led growth should be relatively better for the sector as a whole. Obviously, considering the kind of SKUs that they've introduced, the direct reach in terms of retail spread, and expectations in terms of the presence, both in terms of online as well as e-commerce, I think that should also abet growth when it probably comes to volumes across product categories. Having said that, our own sense for the entire space is that QSR players should show steady recovery from the second half. FMCG companies selectively are looking very attractively placed on parameters, on all the parameters that I discussed. A few of the stocks that we hold in our global portfolios are stocks like Jyoti Labs, Mrs. Bector Foods, where our belief is that it should start getting reflected, all these factors, in terms of better volumes and stability in earnings as we map that through our EPS ratings over the next few quarters. So being a little bit selective but optimistic on FMCG and QSR as a space.
All right. IT was also at the highest spot. They had record high this week, the index. And also metals came back. That sectoral churning, which sectors do you think that one should eye on the coming week?
So I think for coming week, as I mentioned, that pharma is one sector where we are focusing. Automobile is another sector, and IT definitely is on our radar because most of the IT stocks are almost shown a good breakout, and the large cap IT like TCS is almost hovering around its all-time high trajectory. Even the IT index has made a all-time high in this current week also. So we believe that here we can see good traction. So from IT space, I think one can focus on TCS. Here we feel that resumption of rally would be there, and we can see further higher level in the TCS. So TCS is looking attractive. We are projecting target towards 46.50 on the higher side. One can keep a stop loss of around 43.90 to go for long in TCS. And from mid-cap IT space, L&T Technology Services, that stock is also looking very promising. The way stock managed to give breakout on the weekly chart, we believe that here we can see traction towards 5700 to 5800. So L&T Technology Services can be looked at to buy for with stop loss of 53.90. The another sector, as I mentioned, pharma is also looking promising. We are continuing our bullish view on Sun Pharma, and we believe that here we can see continuity of uptrend and possible upside towards 1850 to 1860 would be there. So Sun Pharma is buy with stop loss of 1740. And another stock from pharma space that is looking attractive, that is Glenmark. This stock is continuously moving in uptrend. And the way stock is trading at all-time high trajectory, we believe that here we may see further more continuation of up move, and possible rally can extend to 1750, 1780 kind of zone. So Glenmark is also looking promising with stop loss of 1640.
TCS, L&T Tech, Glenmark from IT and Pharma have made it to Rajesh's radar. But Mayuresh and Rajesh both stay on with us. As we slip into a short break, we'll keep the discussion going on the other side. Stay tuned. Hi there, welcome back to Watching Your Trades on ET Now. Let's keep it going with our guests talking about the week that was and what to look forward to going ahead. And Rajesh, I'm going to come to you. Give us a sense of the kind of moves that we're seeing in all these internet stocks, the new age stocks. They've done pretty well And they've risen from their 2024 lows as well. Take a Paytm, Zomato, Nykaa, Car Trade. All of these stocks have done phenomenally well over the last couple of weeks. And of course, you had the big trigger coming in for Zomato and Paytm, the transfer of that ticketing business. Tell us, what's your view on this sector going ahead? And do you think there is some stability in this up move or some sustenance that we can actually go ahead and safely pencil in now? Would it be a good time to buy a couple of these names?
So definitely very strong buying action has been witnessed in all these stocks which you pointed out, and I think these new age companies have shown very strong buying action in last couple of days. The way Nykaa has moved up above the level of 200, we believe that till now stock holds about 210 kind of level. There is still possibility that we may see another round of rally in Nykaa, and possible target towards 240, 250 could be there on the higher side. Zomato is holding the ground at higher level. The way stock has moved up in last couple of months, and we believe that here is again potential to move further higher to level of 300 to 320. So I think here also one can deploy some trade in any kind of minor dip if you get in the volatile market. We are bullish, and till stock is holding about 240 45 zone, I think one should use any minor dip to deploy long trade in Zomato also. Paytm has also moved up quite significantly in last couple of weeks. The way stock is moving in upsloping channel on weekly chart, so it clearly shows that there is sustained buying action has been taken place in this stock in last couple of weeks. The way stock is holding above 540, 530 mark, I think we may see another round of rally in this stock. Immediate supply zone is placed at around 580, 590 zone. If able to cross those level, then this rally can extend to 630 also. So I think there is a fresh buying interest is returned back to all this new age company. We believe that more traction we could see in near-term basis.
Okay, quickly tell us, Rajesh, the specific stocks that you're eyeing this moment.
So first stock, that is Interglobe Aviation, very strong breakout of almost 8 to 10 week consolidation has been done in this stock. Long built up is there on the derivative data. The way stock managed to give breakout of 8 to 10 week consolidation, now stock is trading at all-time high trajectory. We believe that this stock may have potential to continue furthermore upside. 49.50 where we are projecting new target for the stock on the higher side. One can buy this stock with stop loss of 4600. The second stock is from mid cap space, that is Craftsman. Craftsman again registered new all-time high trajectory in today's trade. The way stock again managed to give breakout of its previous swing high with the volume action. The near-term, short-term indicators are in bullish trajectory. So Craftsman can be looked at to buy. 6150 to 6200 could be the next target on a positional perspective, and one can keep stop loss around 58.20. And the third stock is from the telecom space, that is Bharti Airtel. Continuity of uptrend is there in the stock. Mild profit taking again attracted a buying interest at lower level. The way stock is holding about to all its important moving average in the today's session, again stock managed to give breakout of its falling trend line on a daily chart. So we believe that here we can see furthermore continuity of uptrend. 1550 would be the next target for the stock. Keep your stop loss around 1485.
All right, Rajesh, thanks for taking us through that. Mayuresh, very quickly tell us if you are spotting something interesting and how would you navigate the week coming ahead?
I think it should be a reasonable amount of week. Don't see any structural downsides for the market. Having said that, we like Praj Industries at Markets with India. Our belief is that the kind of innovations that Praj is making outside the petrol diesel blending, the diesel blending, the ATF blending, the marine blending. We are into high purity solutions. Their engineering business, specifically in water management, is doing well. They've got a decent order book in excess of 4,000 crores. That is not much of an issue. Margins have been pretty solid this quarter around and should show signs of improvement as well. So it fits most criteria laid out in Cancellum, and therefore Praj probably becomes one stock that we're liking at Markets.
Thanks very much for highlighting that. Mayuresh and Rajesh, thanks very much for being on the show with us today, highlighting all that stocks and sharing your market outlook and views also with us. With that, this is the wrap on this weekly edition of Your Trades on ET Now. Thanks very much for watching. We see you on Monday. We have a lot more action from global front which is coming in, which would play at the best. Thanks very much.